Hello traders, you're welcome back to the Forex Geek channel. In this video, we are breaking down one of the simplest and most effective trading strategies out there, and that is the Larry Corners RSI-2 D1 strategy. It might sound complicated, but it's not complicated. All right, Larry Corner, who is the strategist that created a trading system that is based on the RSI for the daily time frame. Okay, so if you are a trader who likes clear rules, fast setups, and high probability signals, this is going to be right up your alley. Okay, now what is this strategy exactly? Larry Connors, a well-known trading strategist, developed a unique method using a 2-period RSI on the daily time frame. So let's go to the daily time frame and let us add the 2-period relative strength index to the chart. I'm just going to change the settings right now to 2-period. All right, just going to change this to 2-period. Okay, now most traders use RSI with 14 periods. That's the default, right? Connors flipped that on its head. By shortening the RSI to just 2 periods, you get lightning fast signals when the market is extremely overbought or oversold. And that is where the edge lies. Okay, so here's how the basic setup works. You apply the RSI-2 to the daily chart, ensure that you are using the daily chart. All right. For long entries, you wait for the RSI-2 to drop below 10. So you will have to change the style. Sorry, not the style. You would have to change the overbought and oversold levels. That is the RSI upper band and RSI lower band. You're going to change the upper band to 90 and you're going to change the lower band to 10. All right, because we're talking about extreme levels here. Okay, we are going to be dealing with the extreme levels. All right, so after you have applied RSI-2 to your daily chart, ensure that you change the settings. Your overbought should be at 90, oversold should be at 10. All right, so for long entries, you wait for the RSI-2 to drop below 10. For short entries, you wait for the RSI-2 to go above 90. Sounds simple, right? But that is just the surface. The key to making this strategy work well is using a trend filter, something like the 200-day moving average. Okay, so we're going to be adding the 200-day moving average to the chart. We're going to be adding the 200 EMA. All right, the moving average is our trend following indicator. Help us identify the prevailing trend in the market. We have to filter the trend, right? All right, so basically if price is above the 200 EMA, you only take long setups. But if the price is below the 200 EMA, you only take short setups. So let's say you are trading Euro USD, right? And the pair is trading above the 200 EMA. And maybe you notice when the RSI dropped below 10, all right, that's a potential buy signal. Once you are in the trade, let's say you got your confirmation around here, right? You can see that the RSI dropped below 10 and the price was above the 200 EMA already, right? So this would have been a good place to look for a buy entry. Perhaps after this bullish engulfing, you can see this bullish engulfing that formed here, would have been a good place to enter a buy trade. All right. So once you are in the trade, your exit can be either a fixed target, like a 1:2 risk to reward ratio, or you can exit when the RSI-2 crosses back above 50. You can actually decide to exit when the RSI-2 crosses above 90, all right, not 50, sorry, when it enters the overbought territory. All right, so for our stop loss, it can be just below the moving average. Then for our take profit, you can actually decide to use, key resistance zones. Yes, you can use resistance zones, but you can also be monitoring the trade manually at the same time, so that if the RSI enters the overbought territory, you can exit. In that case, probably would have been exiting around here, giving us a risk to reward ratio 1:2. So if you had set your stop loss below the recent swing low, below the moving average, and then you were targeting resistance zones, that is if you have a reference. Okay, what I mean by if you have a reference is if there are previous highs. For example, this is a resistance zone, so we could have decided to set our take profit around that resistance zone. That is a reference point for your take profit. But at the same time, while you have a reference point, you can also be looking at the RSI. When it enters overbought territory, you can go ahead to exit your buy trade. Okay, the reverse is the case for a sell. Okay, so this strategy shines because of its clarity. There is no guessing, no signal overload. It works beautifully on the daily chart, which filters out noise and reduces false signals you often get on lower time frames. Plus, the rules are simple enough to be automated or manually tracked in a spreadsheet. All right, so whether you are a beginner looking for a solid strategy to start with, or an experienced trader wanting something reliable to add to your toolkit, the Larry Connors RSI-2 D1 strategy. Remember that this strategy is designed for the daily time frame, okay? So do not use the strategy on any other time frame whatsoever. All right, ensure that you use the strategy on the D1 time frame, okay, strictly for the daily time frame. All right, this strategy is actually worth your attention. Okay, simple does not mean weak. In this case, it means refined. All right, ensure that you observe good risk management. Do not trade with an amount you cannot afford to lose. Do not risk more than 1 to 2% of your account balance in a single trade, and ensure that you stick with a good risk to reward ratio. For each trade that you want to execute, ensure that you are risking an amount you can afford to lose, and your potential profit target is at least times 2 of what you're risking. All right, don't forget to smash that like button, subscribe to the channel, and turn on notifications so you catch the next strategy breakdown. Drop a comment below if you've tried this one or you want to see it back tested live. Thank you for watching. Look forward to seeing you in the next video.